It's a good afternoon to you. Thank you so much for joining us. We're live here at the Johannesburg Stock Exchange. Then we get straight into this market picture. It certainly has been very interesting of late. A whole lot of issues have happened. Yes, fine. The Suez Canal situation with Ever Given, that cargo ship or that container ship that got stuck out in that part of the world around Egypt. Certainly was interesting enough. Then we had Archegos Capital with impact on Nomura Capital out in Japan, impact on the banking sector. So where to from here is perhaps the sense then as we close out the first quarter of 2021. It has been exactly a year, effectively a year and a little bit then when one considers the impact of the market on South Africa, coronavirus and how exactly things have fared. So let's take a look at how it is then today. Negativity, unfortunately, to close out what is the first quarter of 2021. We're seeing a whole host of negativity out in Asia. The Nikkei is the biggest faller today, going down more than 0.8%. So weakness out on that front. Negativity as well for the CAC 40 and the FTSE 100, 0.2% weaker, with the European market faring quite badly too. That sentiment has then been shared off into our markets as well. More than 1% lost for the JSE All Share in this lunchtime trading picture, below that 66,600 point mark at this point in time. 1 2/3% weaker as the financials. That's been pushed down by the banking stocks, which have taken a dip by that similar mark. 0.5% weaker as well were resources, with 1.25% down was the industrials. Blood on the floor, unfortunately. But despite that, there are a few companies that do take a little bit of an advantage when things go this way. Murray and Roberts today going up nearly 3%. Sign-off as well, managing to gain 2.7%. So there is some sense of positivity tracking through on that front. But the big stocks are sitting in the negative counter, unfortunately, today. Massmart going down more than 5%. Hammerson as well as Ultron going down more than 3% as well. So big falls there as we close out this trading picture for the first quarter. Brent crude oil is 0.25% weaker, though. That's sitting at $64 a barrel, should I say. So the big question marks will still be around that OPEC meeting that is scheduled for tomorrow. They are expected to keep a hold of supply cuts, particularly going into the month of May, and we'll see then how much impact that will have. Markets already taking in some of that news, and once that announcement is made, then tomorrow we should then get a clearer picture that oil price is bound to remain pretty steady. And even though there were suspicions that it might head to $70 a barrel, it does look to be staying pat in and around that $65 a barrel mark. In terms of platinum, that's seen a little bit more demand today, going up more than 2%, but it's been a pretty flat stance for platinum, which still sits below 1,700 at $1,685 a fine ounce there. In your currencies, well, we're slightly stronger today, 0.7%. It is a stronger sort of tilt there. We thought that the US dollar in particular, would strengthen as things progressively got better there. We saw some economic data as well out of China, which saw some strength out of that market, which hopefully meant that the rest of the globe would get some sort of gain as well. Not to be, so the US dollar not necessarily getting a lot of gains there. So the local currency managing to inch a little bit better. 14 Rand 80 against the US dollar out on that front. A euro will set you back 17 Rand 37 cents. It's 20.38 then for a British pound. Michael Traherne from Vestac Asset Management. It's a good afternoon to you. It's blood on the trading floor by the seams of things. What would you say is perhaps the primary issue at play here?
Yes, Billy, it's been quite a volatile 2-month period, really, for equity markets. And this week, I suppose, has been no exception. Whenever we take one step forward, we take 2 steps back. And at the overall level, it looks like it's a bit of a rebalancing from client portfolios. There's a bit of skepticism around what happens with the third wave of COVID, that's globally and locally in particular. France has just announced that they're going to introduce new lockdown measures to combat their third wave. So it's uncertainty about the future. There's no major driving news at the moment. And then, as you mentioned at the top of the hour, Ever Given being stuck in the Suez Canal was just another small thing to add to uncertainty at the moment.
Yeah, so what then do we look for at a time like this? I mean, as you said, it's the rebalancing of some portfolios, investors getting into the market and saying perhaps where their positions are as they close out the quarter. We head into the second quarter then, and some elements of growth perhaps still being the big question marks here. Are we still looking at vaccines? Are we still looking at the opening up of global economies and what that may mean as well for economies as well? Are people getting a little bit more into those value stocks that they've perhaps left behind in 2020?
The big question on most investors' minds at the moment is what happens with inflation, and by extension, what happens with interest rates. The consensus view coming into 2021 was that inflation was nothing to worry about, and effectively interest rates would stay at these very low levels for the foreseeable future. That's certainly the message that central banks are broadcasting. Investors, though, are saying we're not so sure. All this money printing effectively must lead to inflation at some level, which then leads to higher interest rates, which means lower growth, which means lower asset prices and stock prices in particular. And that seems to be quite a big question that investors are grappling with, because that has a direct impact on growth and share prices. So your guess is as good as mine, Arabile, but Vestact here, we long-term holders, and these things are all short-term noise that we ignore, and we use these dips as buying opportunities.
Yeah, that certainly does offer the right kind of buying opportunity, I suppose, at this stage. We had hoped to even get to the record territory of around 70,000 odd points for the JSE All Share. It's not to be, as that rally that we saw at the start of this year kind of fade away somewhat. Just very quickly, though, with the currency, we're sitting 0.7% better, or 14 Rand 80. Yes, it's not too much to write home about, but having seen us trade in and around that 15 Rand mark, do you see perhaps some continued strength from here on in, or will it depend just on that inflation picture that you noted out of the United States, and therefore the interest rates out of that number one country as well?
Sure. Currencies are so difficult to call because, as you mentioned there's at least 3 or 4 different driving factors, and whatever's driving it on the day is different. Overall, though, generally we take our lead from what's happening with the US dollar. So today we're looking pretty good, but the dollar's looking weak against most major currencies, and that's probably the reason that we're at the 1480s and where we opened this morning in close to 15. The Rand has been resilient, though, for the last couple of months, staying around this 15 Rand to the dollar level, slightly higher, slightly lower. In the US, the main focus now is Biden's going to be presenting a $2 trillion infrastructure plan this afternoon, and he's expected to announce tax hikes for corporates to fund the infrastructure. And the market will be paying close attention to see if he can get those tax hikes through. Obviously, increased taxes, not good for company profits, not good for share prices, not good for sentiment. So let's see what happens on that front. But overall, as you say, quarter being locked out, JSE All Share was up 12% for the year, so you can't sneeze at that. And being driven higher by platinum stocks, which are up 25% for the first 3 months. So it has been good if you've been in the correct sectors.
Yeah. Would you get into those mining stocks at this point in time? I mean, I know Vestact has long held a position of a very, shall we say, frugal sort of outlook when it comes to the mining shares in particular. Would you rather go into those mining companies now, considering the resource boom that many are touting, or would you still rather get into the metal maybe?
Yeah, very difficult to call. Mining stocks in general are very, very cyclical. When the going's good, it's amazing, and you'll see their share prices go up like a rocket ship. Unfortunately, when that cycle turns, it turns quickly, and their profits drop like a stone. So it's something that they've done really, really well for the last 18 months to 2 years. History will probably point towards the top of the cycle or near the top of the cycle, so it's something we would avoid. It'd be interesting. It looks like metals are being driven by this move towards electronic vehicles, and EVs use quite a different metal mix to standard combustion engines, and that seems to be where traders are positioning themselves. Given that EVs are still less than 10% of global vehicles, it might be a bit early. But as a South African, to see the mining stocks doing well, it's great for our economy and good news for unemployment in general.
Yeah, certainly does bode well on that front. Michael, appreciate the time. Always good chatting to you. It's been an absolute pleasure being with you here as we get to unpack these markets over the last number of years as well. It's been an absolutely great journey. Thank you so much for your time on all these days that you've been with us. Michael Traherne there
In an
from
honor,
Vestat Asset Management. Appreciate it. Well, that brings things to a close then from